Hi, and welcome again to another edition of Market Analysis for today, January 3rd, Monday of 2025. I'm Gio Benacourt. This is a recording by Vantage Markets about 2 hours prior to the U.S. session open. All right, in the aftermath of Trump's tariffs increase on China, Canada, and Mexico, we have open with a very strong gap down. Now, obviously, this is indicating a sudden shift in market sentiment due to the news of these tariffs that is going to obviously bring more volatility across the spectrum. Now, this type of gap can be addressed as a breakaway gap, which is a large gap that marks the start of a new trend, and this could be that new trend of trading down, or a correction being the making. It could be the start of that correction. So let's take a look at where we could find a level of support now. Well, the first one is going to be that the lower Bollinger Band. The second one, I'm just going to use a round number, 20,600. As for that, then resistance, the 20-day moving average, and then just 21,600 right around here. Let's see if will the market come back up and close that gap, or will we see a continuation to the downside? That's for the Nasdaq. Let's take a look at the S&P 500. So the S&P 500 has also opened up gap down strongly. So this one, let's just use the 50-day moving average and the lower Bollinger Band, the 20-day moving average within the Bollinger Band, and then this session right here, right around here. Let's just use that as our level of probable level of resistance for the S&P. Again, this is a breakaway gap, and this is often used as a signal that the trend has changed. So that's that Dow Jones Industrial. This is one that not as much as the other two, but it did also open up gap down. Let's just use the moving averages for it. 44,800 ish as a first level, and then just that triple top basically done right around 45,181, around that area. So the sentiment selling across the board for the indices. Then we have energy. With that particular scenario, it opened up, gap up, it has been closed. So we can anticipate that energy prices are going to obviously increment. So therefore, we are going to go with the direction of the gap, which is up. So buying. Now, let me take a. So you saw the difference between the other gaps. Like, for example, look at the gap of the Nasdaq. See how wide that is. The bottom. This candle closed at 21,570, and this puppy opened up at 21,191. So that is that's about 400 points almost. So I want you to look at the difference between this gap and this gap. And so this gap can be called a continuation gap. So this could be a continuation gap, which is a gap that occurs within an established trend and signifying continuation of the existing momentum. So we had a momentum right when the market found its bottom at 72, and it rebounded from here, it rallying. So we open up, gap up. So continuation, that's what I think is going to happen. So going long the oil, and the levels are going to be the same ones as we really didn't touch any of them. Then Nat Gas, we're going to be looking at Nat Gas. So Nat Gas has spiked. Let's use a 20-day moving average as our second level of resistance, 3.5 as a first level of support, and then let's just use this level right here around 340. So again, also this Now this, it can't be a continuation gap because it will imply that a continuation of the trend. So this is a counter trend. So this could be called an exhaustion gap, and this is a gap that appears at the end of a trend, and potentially signifying a trend reversal, and that's what we are looking at right so far. So we have been in a downtrend, so the trend reversal, a gap up. So let's see if that will be the case. So going long Nat Gas. Then we have gold that, I mean, today with today's fluctuation, it just really did a number here. So it didn't touch that second level. So let's just use 2760 and just leave that first level 2772, and then let's use the upper Bollinger Band and that all-time high as our probable level of resistance. So let's see. It also opened gap up. It has, I mean, it did a fluctuation, strong fluctuation to the downside. It rebounded, also because of the dollar index. Dollar index also took a open up a gap up. Then we have silver that also had traded downward. Is retracing so far. So I think silver is going to just stay idling, stay within range, just sideways ranging right here. That's what I think silver is going to be doing. Gold is a different story. Copper is trading below our level, so we need to update them for 10. It's going to be our first level, and let's just use a little bit lower than where it is, and that's 415. Let's use the 20-day moving average and that swing high as a possible level of resistance. So it opened gap down, okay? So it was basically the market was within a range. So this could probably be considered a continuation gap. So let's see what will happen. So for now, I'm staying out of copper because it could probably go down, but let's see what happens. Bitcoin has just tanked. 90,000 is going to be that psychological level of support. Let's just use the 50-day moving average within today, because it's just 100,000 is going to be our first level of resistance, and the 20-day moving average is the second one. So there we have our levels for Bitcoin. Let's see how much will it retrace. The euro also opened up strongly gap down. Wow, it's a strong gap down. So let's use the lower Bollinger Band. Let's use the 20-day moving average as our second, and let's just use 103 as our first level of resistance. Let's see if the market will find support, will find more buyers and bring it above 103. Then the pound also trading with a gap down, looking to close it. So let's use 122 as our first level of support and 122.5 as our second one, as a first level. Then we can't use the 20-day because it's basically above where the market is at. So let's use 124 our first level of resistance, and then let's just use this part right here as our second level of resistance, looking to close that gap. And the dollar index open up also gap up. Let's see how much more of a correction we'll be doing today. Okay, so there we go. All right, so we're gonna be seeing a lot of volatility today. This week is gonna be also filled with a lot of news, a lot of companies also reporting. Okay, so it's gonna be one heck of a week. So everything open, gap down, and across the assets, the indices. So will we have a red week? So let's be cautious and make sense of the things that are happening. And this is just the beginning. Have a great trading day, and I'll see you tomorrow.